All right, all right. What's up, guys? Matt here, Flex Trades. I hope everybody had a great start to their week. As always, at the start of these videos, go over broad market with you guys, lay out some levels, downside levels of interest, upside levels of interest, areas where I've identified as potential supply, demand, et cetera, kind of my short-term thesis, my short-term visualization. So I'll go over that with you guys. And then I have several individual names as well. I'm going to do the same thing, go over some key levels, kind of go over a little bit how I'm intending to play these setups, go over some areas where I've identified as, okay, this is going to be where my risk is, et cetera, et cetera. So I'll get into those. But first things first, as always, broad market. And to close things out last week, Friday, we had that brutal red day, sharp pullback, high velocity, some volume to go with it too. You see SPY, that volume Friday. So the candle and volume both supported that downside move. And to be perfectly honest, it was overdue. And I can't say that I predicted the velocity behind Friday's drop, but I've definitely been waving the caution flag over the last couple weeks. And that's something that I'm always going to do after a period like we saw from July's lows and this stair step pattern up through mid-August. So almost a month consecutive of just kind of stair stepping in a very solid uptrend. And there were a few days, notably August 10th, for example, where we had a sizable gap up and it was a gap and go, and it just kind of squeezed out shorts. We had a red day the following day, trapped more shorts, and then further blow off. So it kind of felt like the latter half of this stair step pattern was more or less a blow off short squeeze from the bottom. It felt like a lot of shorts were trapped. It felt like they really squeezed this thing out. So a digestive period made the most sense over the short term. And again, I've been waving the caution flag for a couple weeks now. And again, while I didn't predict Friday's velocity, that intensity of a drop, because obviously if I would have, I probably would have made much more money Friday. I've still been erring on the side of caution, and I've been waiting patiently for a pullback phase, for this digestive phase. And now that we're kind of getting down toward this 4,000 level, this range I've identified into here, toward the bottom end of this range, down toward the low 3,900s, I kind of see this as a potential area where demand can outweigh supply, i.e., favorable area for a reversal. And so that's kind of really what I'm focused on over the next several sessions. Perhaps over the next couple of days, we round out a little bit, maybe a little bit of a bounce. But naturally, the first scenario that I'm eyeing, the first scenario that I'm visualizing is a couple days of a micro channel down in this range where we are here, and then potentially set us up for a little bear flag out of that micro channel, and then perhaps a little follow through downside. And then that's where I'm going to be looking for that reversal trade, that broad reversal again in this 4,000 down toward low 3,900s. I like that area. So again, scenario A, couple days, micro channel form right around that 4,000, 40, area, and then potential downside follow through only to potentially find demand in this area. And again, the lower we get down toward 3,950, perhaps even down toward 3,900, I like the chances better. They're more favorable for bulls, and bears get what they want. They get a little bit more downside, and perhaps we can even create another scenario where shorts are trapped and it is conducive for an environment to follow through and reconstruct. But that follow through downside, construct off that, build back up, and then upside area that I'm looking is going to be that low from last Wednesday, Tuesday, Monday, which is right around 41.20. So in summation, broad market, this is overdue. It's welcomed. If you're a day trader, if you're a swing trader, any of the above, really, this is always an ideal scenario. Get a few days, perhaps a few weeks of pullback. Candles like Friday, where you get a nice sized chunk just shaved off, 3%, 4% downside, another half percentage point today. You can see that the bleeding slowed a little bit today, which is a positive sign if you're a bull and you're looking for that bullish reversal. These things are good. They kind of give you more kind of light at the end of the tunnel type of feel. Whereas when you just have these stair step for a month straight, it kind of traps people in this mindset that everything's all fine and dandy, and really you need volatility, you need pullback, you need digestion, all of that good stuff. So again, that's kind of where I stand with broad market. We'll see how that plays out over the next couple of days. But now I'm going to get into the individual names because I know that's what a lot of you guys are here for. And first things first, BABA. We had that strong move throughout the week last week from upper 80s up toward 105, that blow off on Friday where we gapped up to 105 only to bleed out all day. A little bit of follow through on that red bleeding today. So going forward, ideally we can get a pullback into this gap, 95 down toward 93 range. That's kind of the best risk to reward for me personally. I've got bids in that area. Again, for those who are kind of new to the way I do things, the way I kind of take positions, etc. The way I scale into these positions is in an intrinsic value type of approach. So for instance, if equity's trading at 96, I'm probably pulling up a $90 strike or maybe an $85 strike in the money call closer toward that intrinsic value mark. And I kind of scale in that way. And so that's kind of what I'm looking for here. Probably pick the $90 strike, maybe 85. We'll see based on premiums. I haven't even looked yet, but depending on the premium, depending on what makes sense. And then I kind of scale in as that goes down. My risk on something like this is probably down toward $92, maybe $91. Scale in that way. And then I'm going to kind of look for a curl, maybe a couple inside days. But ultimately, my risk is going to be down in that low 90 range. And we can see if that reconstructs itself. But for the most part, on a setup like this, I'm really just going to be patient for a little bit more chart data. I want to see a little bit more of that pullback into that gap range, a little bit more follow through, reconstruct itself, and work its way back up toward 100. And again, the big levels to the upside are going to be 105 and up here around 108. These previous two highs up here, if we can break through those two spots, then we really kind of go back to the same thesis that I've had on this name for months now, this kind of long-term reversal type of look. So that is still in play, and that's really kind of primarily what I'm looking for, but I still am interested in scaling in on dips. CGC and Tilray, the marijuana sector, there's subtle signs here of reversal. It's a little early. I've tried trading these a couple times over the last couple weeks, some with profits, some with losses. It's kind of been a net zero, but I'm still interested. I'm still looking for dips here. CGC, I'm willing to keep my risk down toward around $3.50 or so. Tilray, right around the same area, right around 360, 350. So again, looking for those washouts, lower volume washouts down toward that risk area to scale in this position. But if CGC gets back up toward this 430 mark, the previous high, Tilray right around 450, if these names can get back up to those previous highs and bust through them on a volume spike as well, then there's plenty of upside room. And you're talking about a sector that's really just been beaten to crap over the last year, really the last 18 months or so, just bleeding out. And now we're finally trending over the 50-day moving average, putting in higher lows, putting in higher highs. So it's certainly an interesting sector, and I'm definitely building a position, and as always, respecting my risk. ATAI, the psychedelic mushroom sector, another interesting sector with another interesting potential reversal type of chart, kind of in line with what I just went over with Tilray and Canopy. The multi-year, really over a year now, where we've just been downtrending. And finally, now you see a case of some higher highs, some higher lows, some higher highs. So on a setup like this, I'm looking to scale into dips, the low $4 mark, call it $4.20 down toward $4. That's kind of where my risk is at this point. So call it, a 50-60 cent downside. And if this can break up through $5.50, and there's volume to support it as well, then you're talking about a massive reversal type of setup. And this is a classic example. And also same with CGC and Tilray, classic examples of asymmetric risk to reward, where you have an asymmetric risk profile to the downside being much more limited than the potential upside reward, in other words, potential. So again, looking for dips, going to respect that risk. And if we can break a couple of those key levels on the upside with volume to support them, these have the potential to reverse over the course of the next month or two. Bed Bath & Beyond, this one was a massive short squeeze over the last couple of weeks. And then that massive pullback a couple weeks back, almost a 70-75% pullback from highs over the last several days, over the last week or so, kind of narrowed that range, really contracted in on itself right below that $11 mark. And then today, right around that $12 mark, popped over it, ran for $2-3. And so now over the next couple of days, and I should note that there was volume to support today's candle as well. So that's always a positive. It could be another example of a situation where shorts are again trapped. It's a little too early to tell. That's not the entire basis for the trade thesis. And again, with all that being said, I'm going to keep my risk down toward this $12 to $11 mark, down in this range, down below $12, down toward 11. That's kind of where I'm looking, okay, if we dip down to that area, probably cut the trade for loss and move on, right? Again, it's always extremely important to have that risk in mind. So that's kind of the downside risk that I'm willing to go down to before I take my loss, right? But if we can have another couple days here of inside candles, inside meaning within today's range. So today's range was 11 up toward almost $15. If we can narrow that range inside that over the next couple days, this could be a potential follow through squeeze candidate. And again, we have this gap profile from 13 really up toward 22, but you could say the upper end of this gap is right around low $16 range, which even still is a pretty solid upside trade from where we closed today. You're talking about another 20% upside. So again, primary scenario, couple inside days, keeping that risk down into the $12, $11 range, potential follow through. And that's kind of that. I'm not a diamond hand. I'm not a Wall Street bet ape. I'm not looking for this to go up to $100 or $500 or whatever absurd price targets that some of these message boards have. All I'm observing is chart data, volume data, and maybe a sprinkle of short interest data. But for the most part, it's just the chart. I'm just observing the chart. So continuing on now, HOOD, I like the way this is kind of bottoming out right above this 50 SMA. We had this pullback from near $12 over the last couple of weeks down toward $9. And now we're kind of building a base riding right along this 50 SMA. So if we get up toward $10, break through that $10 mark, this is really set back up brilliantly over the next perhaps couple weeks, maybe month or so. Again, a setup like this probably for the most part, a lot of these setups, to be honest, are going to be broad market dependent. So if broad market continues pulling back, continues chopping, breaks below this 390 level SPY, this 3900 level SPX, and there's just more downside and we can't get rid of that downside, something like HOOD, HOOD, probably isn't going to hold up. So again, it's extremely important that I lay out a risk in my trade game plan. And for me, that risk is going to be down around that $9 mark, perhaps into the upper $8 mark, $8.80, $8.70, somewhere like that. But it's an interesting setup and I'm keeping my eye on it, building a position slowly. And last but not least, we have Weber, WEBR, popped up over the last several days as a high short interest candidate. Volume's not super impressive. It's not the most liquid of setups, but it's got high short interest, low float. So it kind of fits that criteria as far as ingredients go. and it's coiling up right below this $10 mark. Previous high is going to be up there around $11 or $11.50 or so. So really over the next couple of days, what I'm looking for is some further contraction, some inside action, kind of building into that $10 break. Again, that's kind of the ideal scenario. Doesn't mean it's going to play out exactly how I would like it to. If that's not the case, I'm looking to build a position on any intraday weakness, and my risk is going to be down around probably that $9 to $8.50 range. Probably somewhere in this area is where my risk would be on something like this. So again, primarily we have chart, we have volume clustered over the last several days, over the last couple of weeks, really. Volume cluster, chart data starting to contract a little bit up here. High short interest, low float, kind of has some of the ingredients, if not all the ingredients in place for a potential short squeeze candidate. But again, I'm not really fundamentally a guy who, I don't really make my trade thesis based on short interest data. I'm really just a chart guy. But when something like that kind of pops up and I take note of that, in addition to the chart data, in addition to the volume data, that's when I kind of think to myself or it kind of makes me go, okay, you got the chart, you got the shorts. So perhaps the ingredients are in place. So that's definitely something I'm going to be paying close attention to over the next several days. And with that being said, guys, that's the watch list. We went over broad market, talked short-term visualization. We went over a couple sectors, the marijuana sector, psychedelic mushrooms, subtle reversal trends, early into the stage of reversal, but things are slowly setting up. And then a few more small cap, mid caps with potential constructive charts setting up over the next couple of days. But again, guys, a lot of these trade ideas, a lot of the trade theses that I have are really going to be broad market dependent. So first and foremost, S&P, QQQ, tech, big tech, right? All the large indices. First and foremost, those are always right front and center on my screen. That chart data is really important. And a lot of the trade ideas I have kind of come second to broad market. So we'll see how the next few days play out. If we can find our footing, if we can get down into that range, find our footing and reverse. So we shall see. But with all that being said, guys, I hope everybody has a great Tuesday. And as always, if there's anything new that pops up during the day, I will let you guys know in the chat room. All right, guys. Peace out.